In 43 years behind a bank desk, I sat in on more estate settlements than I care to count. And I'm going to tell you something I learned in those rooms that nobody ever puts in the retirement brochures. The children almost never fight over the money. The money is easy. The money has a number on it. What buries them, what strains the family for months, and sometimes for good, is the stuff. The house nobody can bear to empty. The boat in the side yard. The rental with the tenant nobody wants to call. The file folder of investments so tangled that even the lawyer needed a second lawyer. I watched families walk into that room grieving a person and walk out managing a warehouse. And somewhere along the way, I started noticing something else, something quieter. The happiest retirees I banked for, the lightest ones, the ones who actually seemed free, had almost all done the same strange thing somewhere in their early retirement years. They didn't buy their way into that freedom. They sold their way into it. My name is Harold Briggs. I spent 43 years inside the same small-town bank in Ohio, teller to branch manager. And today I want to walk you through the 5 things the smartest retirees I ever knew sold, on purpose, before retirement or in the first years of it, while selling was still their choice and not their children's chore. Now, everybody talks about what to buy for retirement. The whole economy is set up to talk to you about what to buy. Almost nobody sits you down and says, "Friend, the second half of this game is subtraction." So that's today. 5 things. And I'll tell you now, number 2 on this list is the one that will ruffle some feathers, because it comes from inside my own industry, and it is worth more than the other 4 combined for the people it applies to. I'm not going to make you wait for it. Stay with me. But first, let me head off the 2 thoughts forming right now. Thought 1. Harold, this sounds like downsizing my life. I worked my whole life for these things. I hear you, and I want to be precise about what today is and isn't. This is not about deprivation, and it's not about getting rid of anything you love and use. Keep the boat if the boat gets wet every summer. This is only about the things that stopped serving you somewhere along the way and started charging you rent, in money, in worry, in Saturday afternoons. And thought 2, the opposite one. We don't have an estate, Harold. We've got a small house and an old car. Friend, this list is not for the wealthy. 3 of the 5 items on it are exactly the traps that catch ordinary households hardest, because when the budget is tight, a hidden monthly drain hurts more, not less. Stay with me and you'll see what I mean. Here's the one idea to hold all the way through, and it comes straight from those estate rooms. Everything you own charges rent. Every single thing. Some things pay their rent back in use and enjoy. The good chair, the truck you actually drive, the house full of grandkids at Thanksgiving. But everything else, everything idle, is charging you and paying you nothing. It charges insurance, registration, maintenance, storage, property tax, fees. It charges worry, that low hum you feel when you walk past the thing you're not using and not dealing with. And it charges time, yours now, and if you wait long enough, your children's later. The retirees who got this right asked one simple question of everything they owned, and I'm handing it to you today. Does this thing still pay its rent? 5 places to ask it. Here we go. Number 1, the house that got too big. Now, I want to be careful and honest on this one, because I watched it from both sides of the desk. Nobody loves a paid-off family home more than the person who paid it off. And if you love yours, and it still fits your life and your needs, you keep that house, and God bless. But listen to what I watched happen, over and over. The kids grow up and out. The bedrooms upstairs close their doors one by one, and the house quietly changes jobs. It stops being the place your life happens and becomes the thing your life maintains. 4 bedrooms of heating in the winter, 3 bathrooms of cleaning, a yard that used to hold ball games and now holds obligations. Meanwhile, and here's the banker's side of it, that house is very often the biggest single pile of money the household owns, and it's money you cannot spend while it's shaped like empty bedrooms. Selling the too big house and buying the right size one does 3 things at once. It hands you back a piece of your equity in cash, money that can fund the go years we've talked about on this channel. It cuts the monthly costs, the taxes, the utilities, the upkeep, all sized to rooms nobody uses. And it hands you back your Saturdays, because a smaller place is simply less part-time job. And I'll tell you when I first understood this one, because it wasn't in a seminar. It was a Tuesday, at my desk, and a couple I'd known 30 years came in to ask about a loan. A home repair loan, mind you, for a roof on a 4-bedroom house they'd finished paying off years before, where the 2 of them lived alone. And as I filled in the paperwork, the arithmetic of it just sat there looking at me. They were about to borrow money, at interest, on a fixed income, to maintain bedrooms nobody slept in. They were asset-rich and cash-tight, and the asset was the very thing making them tight. I wasn't allowed to say it then. I'm saying it now. One couple I banked for sold the big colonial 2 years into retirement, bought a tidy ranch 10 minutes away, no stairs, half the yard, and put the difference to work. She told me the thing I always remember. Harold, I thought I'd cry when we handed over the keys. I cried for one day. Then I noticed we'd stopped talking about gutters. Now, the honest other side. Moving is a grief, and it's real, and the market matters. And in some towns, the smaller place costs nearly what the big one brings, which is why the assignment on this one is not sell. The assignment is run the actual numbers, once, on paper, so that staying is a decision and not just a habit. What would yours bring? What does the right size place cost? What's the yearly difference in taxes, utilities, upkeep? Most people have never once done that arithmetic. Do it, and then keep the house or sell the house, but do it with your eyes open. Number 2, the one I promised you, from inside my own shop. The complicated investments with quiet fees. Friends, I spent my career in a bank. I have sat on the selling side of this table, so hear this as a confession as much as a warning. Somewhere in your papers, some of you have a variable annuity you half remember buying, with layers of fees you were never quite walked through, or a whole life policy a relative sold you 30 years ago, still swallowing a premium every month, for a purpose you can no longer name, or a mutual fund quietly clipping more than 1% a year, every year, in fat years and lean ones, or an account at every bank in town, or some private deal that mails you confusing paperwork every March. And before you decide this item isn't yours, let me do one piece of arithmetic out loud, because I watched this number stop conversations cold across my desk for decades. A fee of 1% a year sounds like nothing. It is designed to sound like nothing. But 1% of a $300,000 nest egg is $3,000 every year, paid whether the account grows or shrinks, paid in the years the market rewards you and paid in the years it punishes you. Run that for 20 years of retirement and you're staring at $60,000 and more, once you count what that money would have earned had it stayed yours. $60,000 for a line item you cannot see, on a statement you may not read, for a service you may never have once used. Nobody would pay that bill if it arrived in the mailbox with a stamp on it. It only survives because it never arrives anywhere. It's simply subtracted, quietly, before you ever see the number. Here is the plain truth I learned inside the machine. As a general rule, the more complicated the product, the better it is for the person who sold it, and the worse it tends to be for the person holding it. Complexity is where fees hide. Simplicity has nowhere to hide a fee, which is exactly why nobody ever made a commission selling simplicity. And in retirement, complexity carries a second cost nobody mentions. One day, someone you love may have to untangle it. I sat in those rooms. I watched a widow spend 14 months, locating and unwinding her husband's clever accounts, at exactly the moment in her life when she had the least strength for it. So here is your assignment, and notice, it is not sell everything. I would never say that from this chair. It is 3 questions, asked of every financial thing you own. What does this cost me? In dollars every year. What is it for? In 1 sentence. And could my spouse or my kids explain it at my funeral? Anything that fails all 3 questions goes on a list, and you take that list to someone qualified who does not earn a commission on the answer, a fee-only fiduciary. Ask them exactly that phrase, and you ask what simplifying would cost and save. Sometimes there are surrender charges and tax consequences, so you do the exit arithmetic first, always. But friends, fewer accounts, at fewer institutions, in simpler things, with fees you can name out loud. That single afternoon of house cleaning is worth more, for the people it applies to, than everything else in today's list combined. My industry hopes you never sit down for it. If that one hit home, do me one favor while it's still warm. Hit the like button, because it pushes this video to the next household with a drawer full of paperwork nobody can explain. And subscribe, because I make one of these every single day on the money nobody talks plainly about. All right, number 3, the second car, or the third. Now this one sounds small after houses and annuities, but stay with me, because the arithmetic surprises people. When you were both working, 2 cars weren't a luxury, they were logistics. But retirement changes the math overnight. And the driveway doesn't get the memo. Because look at what that second vehicle actually costs, standing still. Insurance, every month. And you've noticed what insurance is doing lately. Registration, every year. Maintenance, because cars age whether you drive them or not. Rubber dries. Batteries sulk. Brakes seize from boredom. Depreciation, quietly, the whole time. Added honestly, and an idle second car costs many households a couple $1,000s a year or more to mostly sit there. That's real money on a fixed income, and it buys a lot of taxis, a lot of trips, a lot of grandkid visits. And notice something about that number, friends. It's not one bill, which is exactly why nobody ever confronts it. It arrives as a modest insurance payment here, a registration renewal there, a set of tires, a battery, an oil change for a car with 900 miles on the year. No single envelope ever says, your idle car costs you $2,000 annually. The cost travels in pieces, on purpose or not, and pieces don't trigger decisions. That was half my education as a banker, honestly. Watching how the costs that arrive in pieces get paid forever, while the same amount arriving as one bill would get challenged in a week. So do what the sharp ones did. Assemble the pieces. 1 page, 1 year. Every cost that second vehicle actually generates, add it up into a single, honest number. Then hold that number up against what the car actually did for you last year. The retirees I watched handle this well treated it as an experiment, not an amputation. Park the second car for 60 days, they'd say, and live like it's gone. If you reach for it constantly, fine. It pays its rent. Keep it and never think about it again. But a lot of couples find out 60 days in that the second car was a habit wearing an insurance policy. And one more honest note, because I promised you honesty. If one of you needs the independence, if giving up the car means giving up the feeling of being able to go, that's worth paying for, and I mean that. Freedom is a legitimate line item. Just make it a decision, priced and chosen, not a leftover. Number 4, the toys. The RV that hasn't rolled since the trip you don't talk about. The boat that goes in the water twice a summer, on a good summer. The ATVs, the motorcycle, the jet ski that's been sleeping in the garage for years, and, I'm going to say the word, the timeshare. Now, I like a toy, friends. A toy that gets used as joy with a motor on it, and I'll never argue against it. But every toy has to answer the rent question like everything else, because these particular things carry the sneakiest ongoing costs of anything a household owns. Storage, insurance, winterizing, slip fees, maintenance that doubles when a machine sits idle. Because sitting is harder on machines than running, any mechanic will tell you. And the timeshare, that one's special, because it charges maintenance fees that climb every single year, forever, whether you go or not, and it's famously worth almost nothing to sell, which tells you everything about who that product was built to serve. I'll give you 30 seconds on timeshares from the banker's chair, because I watched these come across my desk for 40 years and I never once saw one age well. The pitch is ownership. The reality is an obligation with your name on it, transferable mainly in the sense that your heirs can inherit it. And yes, that happens. I sat in the rooms where it happened. If you own one and you use it joyfully every year, keep it and be the exception with my blessing. If you own one and you've stopped going, do not simply stop paying. That road has consequences, but do get help with a proper exit. The resort's own deed-back program, if it has one, is the first phone call. And your state attorney general's office keeps warnings about the exit company sharks who circle exactly this pond. Because the only thing worse than a timeshare you don't use is paying a second scam to escape the first one. Here's the test my happiest customers used, and it's beautifully simple. The calendar test. When did this thing last actually get used? Not remembered fondly. Used. If the honest answer is more than a year or two, it isn't a toy anymore. It's a monument, and you're paying groundskeeping on it. Selling the idle toys does 2 things. The obvious one, it turns dead metal into live cash, sometimes serious cash, at exactly the stage of life when cash flow is king. And the quiet one, the one people don't expect, relief. I heard it dozens of times. I thought I'd miss it. Mostly I feel lighter. The garage got bigger. The list of things silently scolding me got shorter. And number 5, the side business, or the rental property. This is the tender one, because these were smart moves when you made them, and they've been feeding the family for years, and there's pride in that, rightly. But somewhere in retirement, a lot of owners discover the income stream has a paddle in it, and they're the paddle. Call about the water heater. The tenant search, again. The bookkeeping, the repairs, the vacancy months, the property that is, when you say it out loud, a part-time job you can't quit and can't call in sick to. And there's a banker's concern stacked on top, one I raised across the desk many times. Concentration. For a lot of these households, that one building is the biggest thing they own besides the house, which means the whole retirement leans on one roof, on one street, in one town, staying full and staying sound. That's a lot of eggs under one tenant. So the question for number 5 is the same as all the others, just bigger. Does it still pay its rent in money and in peace? Some do, and if yours does, if the checks are steady and the work is light and you like being the landlord, wonderful. Keep it with my blessing. But if you've caught yourself dreading the phone, do the arithmetic on what selling looks like, and do it while the choice is calm and the market is yours, not someday under pressure. I watched a couple sell their duplex after 15 years, and the wife's line stayed with me. We traded a building for our weekends back. They were not poorer friends. The money moved into simpler things and kept working. It just stopped calling at 2 in the morning. Now let me tell you about the 12th room, because I've been in this one too. Not every estate settlement I sat in was a burden being divided. There was one, late in my career, that I think about still. A retired school teacher, a widower, and when he passed, his sons came in with one folder. One. In it, the deed to a small paid-off ranch house, one bank's worth of accounts, consolidated years earlier, a simple portfolio a child could read, and a letter telling them where everything was and what he wanted. The whole settlement took 40 minutes. And afterward, the older son stood in my doorway and said, "Dad spent his last 10 years traveling and fishing, and he still managed to leave us the easiest afternoon this office has ever seen. How did he do that?" And I told him the truth. Sometime in his 60s, your father sold everything that wasn't paying rent. The too-big house, the camper, a drawer full of complicated paper. He turned it all into a simple life and spent the proceeds on the years, not the stuff. That man is the entire video you just watched, friends. Subtraction wasn't his sacrifice. It was his retirement plan. So here is your week, one coffee at a time. Monday, the rent audit. Walk the property, house, garage, yard, and list everything you own that costs money to keep, with the honest yearly number next to it. Most people have never seen that list, and it changes things. Tuesday, the house arithmetic. Just the numbers. What it would bring, what right size costs, what the yearly difference is. No decision required. Numbers first, decisions later. Wednesday, the paper drawer. Every account, policy, and product through the 3 questions. Cost in dollars. Purpose in a sentence. Could your family explain it? Flag what fails. Thursday, the calendar test on every toy and the honest phone dread test on any rental or side business. And Friday, one act of subtraction. Just one. List one idle thing for sale or make one appointment about one complicated account. Because a retirement gets lighter one sole thing at a time. And the first one, everybody tells me, is the hardest and the best. And do one thing for somebody else. You know somebody with a boat that hasn't been wet in 3 years, or a big empty house they're heating for the memories, or a drawer of paperwork their kids will someday inherit like a puzzle with no picture on the box. Send them this video today kindly, because nobody official is ever going to suggest they stop paying rent on their own life. Then leave me a comment, and I want the 2 answers the way I asked my own customers. What would be the hardest thing for you to sell? And what would be the most freeing? And tell me what state you're in while you're down there. I read every single comment. And subscribe, because next time I'm bringing you something with a deadline on it. There is a new rule at the IRS, right now, that most seniors still have not heard of, worth up to $6,000 a year off your taxable income. And it does not last forever. That's tomorrow. Don't miss it. Everything I've shared today is general educational information, not personal legal, tax, financial, or investment advice. Selling a home, an investment, an annuity, or a property has real tax and legal consequences that differ for every household, and surrender charges and capital gains are nothing to guess at. So before you act on anything from today, sit down with a licensed professional, ideally one who doesn't earn a commission on the answer. That's not me covering myself. That's just sound banking. Look after your money. You earned it twice. Once when you worked for it, and once when you kept it. If you want more straight talk on protecting what you spent a lifetime building, subscribe to the channel. I'll see you in the next one.